Hey, welcome back to Financial Intelligence. This is Vito with Abitano, and today we have an amazing, fun-spirited, very intelligent man I've known for many, many years, Jon the-sy-quimsiam. He's gonna correct me, but he and I go back many years, and he is a business banker. So I want to ask him tons of questions. So let's get moving. Jon, welcome to the show.
Hey, Vito. Thanks for having me.
Patrick, Patrick's here too. So we were just talking about Thanksgiving and what we're doing this weekend, and so typically I'm on a pretty strict diet, right? I do the intermittent fasting. I eat one meal a day, and then I have a small snack, and that's pretty much it. And I've lost a lot of weight, not weight, but I've lost a lot of girth. I went from 44s that I could fit into 38s now. But this weekend, I'm practicing for the big day, just like every good professional should, right? So last week I went to Costco and I got the turkey, got that all ready to start working on it right after we're done with this. But I went and got a couple pies.
Yeah, baby.
As you should.
And I'm like, we're going to save it until Thursday because I didn't want to go back to Costco. I'm going to save it. I got an apple pie and I got a pumpkin pie. And within like 4 days, the apple pie disappeared. And it's not the small one, right? The apple pie is completely gone. The dog's got the crumbs just now. So
good job, Marine Corps.
Right. And the last time, yeah, we haven't even talked about the Marine Corps birthday. Did you hear about the Marines in Austin that got into a fight during the?
I saw a quick short video of that. It looked
awesome. Like, my boys.
Yeah, boys and being boys. Yeah.
I don't know why that's newsworthy. I mean, that's what you send us to boot camp. You get us brainwashed. You teach us that fighting is good, and then you get mad at us when we do what we're taught to do. I mean, it's just dumb.
I'll have to go digging for the video of Vito fighting in uniform. I gotta go look for that one.
Well, thank you for your services, gentlemen.
I would cower in the corner, gentlemen. I would cower in the corner. That's my job now.
Jon, great to have you on, though, man.
Thanks, Patrick.
So it's good to get a chance to ask you some questions.
Jon, did I say your last name right? Sy-quimsiam?
You did. You did. It's been, as a banker, I've been called worse lately.
Not lately. So tell us, what do you do as a banker? You're a business banker, right?
Specifically, business and commercial banking at Bank of America. So as you can see, with the name implying, my focus is helping small to medium-sized enterprises. How that's defined is maybe $1 million in gross annual revenue to about 25 million in gross annual revenue. In all aspects, right, of businesses' life cycle, if you will, whether it's startups, sole props, expanding into a more mature company, seeking expansions, exit strategies. My core competency is really helping businesses in terms of access to capital, financing, which has been a very relevant conversation to date. And really the basics that you can see with businesses, right? Maintaining liquidity. So if I could put it in a nutshell, what I do is I help businesses with operational efficiencies in their day-to-day banking, save them time, money, and like I said before, access to capital.
And it's really the access to the capital that makes you attractive, right? I mean, that's what businesses need, a cash flow. And when they have sales stacked up and they're moving product out the door and there's a 30, 60, 90-day net, they need that money to tide them over too, right?
Exactly. I mean, I think as we can see in the market, in general, access to capital is something in terms of a business growing or using debt financing to grow their business is always there. But with the current market as it is, and I'm sure we'll talk a little bit more about that later, is that relevance of businesses looking into the future, right? Like 2024, of getting that access to capital, or at least having some ability to have that cushion is a much more frequent conversation I've been having.
Yeah. So, like, let's say I got this contract with the United States to sell a lot of bullets that I acquire nefariously. I need capital to buy those, right? And then I send it out to the government for them to use it to send to wherever they need to send it. I would go to you for that kind of thing, right?
Exactly. You know, we help bridge that gap, right? To give that financing and that access to be able to grow that business. So let's say you have
Of course,
accounts receivables, government contracts. You know they'll get paid. When is a different story sometimes, and you still have debt obligations to your vendors, suppliers. We're here to provide that capital, right, to help
right.
the business grow, to build that, to bridge that gap in your cash flow.
And it's kind of like the same thing when you like you still have to pay your employees, you have to pay your light bill, your electricity bill, all that kind of stuff. So you keep the companies afloat. And sometimes you get in a jam, you're like, hey, John, I need a loan. And I can't talk to Vito because he'll break my ankles.
Yeah, exactly. Well, beyond, let's say that's a working capital, right? A line of credit that you were kind of referencing to. There are other aspects, right, in terms of, let's say, permanent or fixed asset purchases, whether it's commercial real estate, whether it's large industrial equipment, business acquisitions, whether it be through conventional, which is straight through the bank lending, or in many cases, which a lot of businesses and I think a lot of the people in the country know now because of the recent pandemic, SBA, right? Small Business Administration. So there are a lot of avenues that I, as a business banker, can tap into to help businesses, right, grow on the financing standpoint.
So break down SBA. Is SBA kind of like where it's a VA loan where the VA is guaranteed by the government, but you as the bank still fund the money? Is that correct?
Correct. I mean, I look at SBA, right, the Small Business Administration, the government arm, as look at them as an insurance company. Right? They're there to insure a lender like Bank of America, right? We're the ones who are going to go ahead and finance that request, that loan. The SBA steps in and says, hey, we will provide our guarantee, quote unquote, insurance, if you will, should anything, knock on wood, happen to your borrower, right? They become insolvent, they go under, you know. You, Mr. Lender or bank, will be covered up to 90% of that exposure or that loan amount. So in doing so, a lot of banks out there and lenders are saying, okay, we have a little bit, we have a guarantee, we have that cushion or insurance, as I was mentioning, and because of that, we're able to apply a more lenient, if you will, underwriting guideline, right? Where certain cash flow requirements might be a little bit steeper if we just went straight to the bank lending. We would be able to loosen that up, if you will, right, in terms of our requirements.
Yeah. So kind of, it's like the same thing with mortgages, right? If you're coming in with an FHA at 3.5% down, you're a little bit more risky if everything else was right versus 20% down. So you come back to me and say, hey, I have this SBA loan. It's the same thing as a VA loan. VA is 0% down, so they guarantee the whole thing. And the lendee, the company would borrow that money, and it's guaranteed by I mean, obviously there's certain regulations or I guess variables that they would look into the business, like how long it's been around, if it's an acquisition, how well it's doing now, what's the past 5 years history. Is there a lot of like I have a friend who just bought a business and good 30% of it is all cash. So you can't really look at that as part of the lending process, right? That's completely out the door.
No, and to that point, whether it's SBA or conventional lending that we're talking about, by and far, most, if not all, lenders are looking at historical cash flow, right? So we want to see filed business tax returns to make a determination on a borrower's ability to service the proposed loan. Additionally, collateral is going to be a very big piece. Obviously, tangible assets like commercial real estate, property is always king. We want to see that.
Mm-hmm.
But in cases where we're doing, let's say, leasehold improvement financing, did one recently for a childcare facility. But they're not buying; they're leasing it up. They're doing a lot of tenant improvements or TIs, along with what we call FF&E, furniture, fixtures, and equipment. SBA, at least the program that we applied for this particular client, needed collateral. So we had to, for SBA requirements, seek that additional collateral to secure the loan with equity in the residence of the borrower or the guarantor. And that was the SBA 7A loan, right, program.
Well, hold on. So what kind of equity were they looking at?
Typically, we want to see within about 80-90% of the value of the loan for coverage in terms of
90.
Pardon?
90. You said 90%.
90. Yes.
Okay.
Yeah. So in oftentimes, again, in that particular example, when you're looking at leasehold improvements, the business owner doesn't own the property, the commercial condo in this case. We would seek, should there be equity in residence, right, on that. And that's a requirement that you'll see implemented for SBA 7A loans.
I see. And then they also have to have some sort of history of experience too, right? Like you can't say, hey, Patrick and I are going to go start a daycare facility. I would fail right away, but probably go to jail because I'd probably kill
I have
a kid.
questions, but yeah.
But so you want to have some sort of business experience, running a business, some knowledge, some kind of background.
I would imagine you would require some kind of business plan, right? That's
correct. I mean,
maybe a better way to do this, John, is maybe you got a great example that you come across either recently or not too far from the past that kind of walks somebody through like how this kind of looks.
So I'll give one example. It was a UPS store, right? They do notary services, things like that. They're pretty much franchisees, right? So it was a business acquisition. The owner was retiring, selling off the business, and surprisingly enough, their accountant, who managed the books for, I don't know, maybe 10 plus years and was part of the business to some degree, was like, hey, this is a great opportunity. I want to buy into it. To Patrick's point, initial concerns were like, all right, you're an accountant, but in terms of actual experience in this particular, like running the store for UPS, managing logistics and all of these other aspects of the business, what is your business management experience to make this successful, right? So whether it's SBA or conventional, underwriters or lenders are always going to look at like, if we're going to foot, right, or basically provide this financing, not only for the purpose of it, but how is it going to grow the business or make it successful, right? So in that particular case, going back to that UPS store, the accountant was involved and very familiar with the finances of the business, 10 plus years, and also within the most recent year, has taken an active role in learning the operations of the business, right, with the employees, managing the trucks, if you will, right, and pickup times and scheduling and orders and such. So getting supplies. Plus, there was additional feedback from the seller for training. And UPS is a very large organization. They have their standards, right, and procedures for, you could say, franchise owners or franchisees. So in that particular case, again, to Patrick's point, what seemed like, oh, this might be tough because there wasn't any operational or business experience, if you will, we were able to overcome it based on the points I made earlier, right? She knows the business, she knows the numbers, and more importantly, within the past year, took a more active role as a employee.
So with UPS and the franchise model, you supersede yourself as not a business owner, but more of a principal employee, correct?
Correct.
Yeah.
In that case, yes, but kind of going back to what you were saying earlier, especially in Silicon Valley, it rings more true. You have excess liquidity, right, from tech industry professionals. You got some kind of software engineer, makes maybe $350 annually and has excess money and says, hey, you know what? I want to open up a Mountain Mike's Pizza. I have this excess money. I want to have some additional supplement of income, right? That would be tough, right, under the purview of any lender, let alone SBA, because to Patrick's point, do you have experience in that particular industry to make it successful? So that would be the biggest challenge to overcome, right? Just because you might have cash flow, just because you might have enough collateral, sometimes it's not the numbers. It's those, I guess you could say, intangibles, experience,
right,
knowledge within the industry.
John, let me ask you. So, and I think this is a great subject for people who are wanting to figure out a way or entertaining ideas of how to open up their own business or franchise, whatever. So, like, how far in advance should somebody start working with you? Like, hey, 2024, I want to do this. I need to start approaching, a commercial lender, right, to look at what's possible. Like, when do you actually come into play?
I mean, we look at ourselves as circles of influences, right? And bankers, attorneys, CPAs. The quick answer is, as soon as you have an idea, right? As an individual, it's like, hey, I want to do a business. I got this idea. I have these plans. I have a dream. Start having that conversation, right? I mean, with those COIs, centers of influences, right? Like, it's not just one, right? That phrase, it takes a village.
Mm-hmm.
You're going to need all those resources to help you build, like what you said, Patrick, whether it's a business plan, financial forecasts. A lot of banks have access to industry data that they can support their clients with. I do that often. I just had one with a client who says, hey, I want to look into an ambulatory transportation company. I have data for that. Take a look at it, right? And let's see if this is something that makes sense.
Oh, that's
back to what we were saying earlier. Back to what we were saying earlier, though. The guy owns like a ton of liquor stores. So I'm like, that's great. You want to plan that, but what is your experience, right? That's going to be the harder piece.
Wait, make sure I heard that right. He owns a bunch of liquor stores. And he wants to open up like an ambulance thing,
like a medical transport. I was like, all right,
alcohol sales are going up. There's going to be a lot more car accidents. I
think he's trying to tie it in. I don't know.
Yeah, that's funny.
I could see it where maybe we know that there's going to be another couple of years of prohibition where you need to hide the transportation of whatever it is you're selling.
There you go, another angle. Of course, the Italian would be legal. I think.
Hey,
I'm in the federally regulated industry, so I'll just keep quiet there.
There you go.
Yeah.
There you go.
I'm surprised that we were actually allowed to talk because I've talked to people from mortgage side people from B of A, and they're not allowed to do video interviews at all.
It's interesting.
Yeah, they're very regulated as to what they can and can't say.
We are very regulated. I mean, and within banking / investments or securities, that's a whole other ballgame too, right? I mean, once you're dealing with other stuff on the other side of the pond, if you will, with securities and investments, that's even stricter.
So break down for me, just out of my curiosity. I kind of know, but since we're here, we're talking about it. What are the different levels of financing that are out there? There's obviously the coveted conventional loan, SBA loan. Then there's got to be some sort of hard money value out there. And then there's independent or VC type investors. that would come in and buy a portion of the company, correct?
Correct. I mean, especially here in Silicon Valley, when you have tech industry or startups, that becomes more relevant in terms of angel funding, or or getting seed money to get started, or private equity. I mean, at that stage, you're giving up a little bit of the business,
And some control.
and control, exactly. And to that point, it depends on that particular business owner or principal, and the type of business they're in. If that is their plan to, like, hey, and this is more relevant again in tech. You're looking to expand, kind of build up the business and the valuation, and then off you go, right? I mean, you have serial entrepreneurs who are just constantly churning and burning, if you will, these type of business models, and they're moving on. Then you have your, I guess you could say, your mom and pops, if you will, or your standard conventional businesses, manufacturing, certain retail, medical, where, like a dentist, if you will, they're in it, right? They're not looking to start it up and then sell off the practice until way later, right? I mean, those business owners are in with the business for the duration, right, until they find their exit strategy or retire. So, to your point or your question, private equity investments, or going through venture capital, angel funding is one option. Yes, you will, as a business owner, surrender equity as well as control in decision making. But if that's your goal, to get that quick startup, and honestly, I think that world has thinned out quite a bit, at least in the past year and a half, 2 years.
Yeah.
And the next step is conventional lending through the bank, right? Where you have a banker like myself kind of going through the process of vetting, right? Your business plan, to Patrick's point earlier, forecasts, and we can do it either conventionally in some cases, or another great option would be, like we said, the SBA. And then there's also mom, dad, and family members that you'll have to ask.
Right. I mean, there's friends and family, right?
Correct.
So, I mean, I think the reason why it's important for us to have this conversation right now is because we are seeing a recession on the horizon. And a lot of people, not a lot, there's going to be a good portion of people that get laid off, and they're probably going to get burnt out or are burnt out right now. They're thinking of different avenues of living, right? Because maybe they're making that 350 at Facebook, and then they're kind of burnt out. They don't want to do whatever engineering that they're doing anymore, or management. They want to get into become a business owner, right? Whatever it is. It could be a retail brick and mortar. It could be real estate. It could be what have you. Real estate's really hard to finance because there's so many of us and there's so much failure behind us that I don't see banks really putting money behind that. But if it's a service that's been around for a long time, there's an opportunity for, say, an engineer that makes $250, $350 a year to come out and say, I'm done with that. What are my options, John? How do I go out and buy this house? Because there's hundreds of businesses for sale right now. And
I mean, that's a conversation. That's a good question. I mean, it really depends, because I talk to individuals who are looking beyond, right? That say, listen, I'm kind of getting burnt out, like you said, with my day-to-day job. I have some excess liquidity, barring interest rate issues and such that we're experiencing at the moment. I do want to, as an individual, look at expanding, right? Maybe something else. I want to see what's in the horizon, if you will. Maybe build some type of passive income, right? Whether it's a multifamily building or apartment complex or such. So, it really depends. I always tell clients, what's your passion, right? I mean, what is something that you enjoy doing? I mean, I have all kinds I love cooking, which, by the way, was my former background, if you recall. But I eat better as banker.
All those fancy meals you have.
yeah.
Wait, you have an expense account, right? When are we going to lunch?
Yeah. Well, let's see. Oh wait, you're chopping up. I can't hear you.
And of course, he's the former cook
really,
chopping
I think
up.
it starts with that. So I'm sorry, but I think it starts with that, right? Like you have this conversation because I talk to business owners, 10 businesses a day sometimes, and the one question is like, hey, how did you start your business, or how did you come to be where you're at? And it was the passion, right?
Yeah.
So I find most, if not all, successful businesses not only start that way, but also continue to be successful because the principles have maintained that level of passion, right? With the business, it's they're trying to build a legacy, hopefully pass it down to family. But if it's something that, hey, I just want to make a quick buck or just try to do this, oftentimes those statistically don't do well.
Yeah, and as you're talking, I'm thinking about these type of businesses you're talking about, which kind of like make up the community of businesses around our communities, right?
Mm-hmm.
These smaller companies that have been around for a long time, or have been there for a while and are getting ready to hopefully be passed on to somebody else in the family, and however, in many cases, not. And Vito mentioned earlier how this, over the next couple of decades or so, over the next 10, 20 years, you're going to see more likely than not, a lot of these businesses have a challenge finding somebody to take it over, and so they got to figure out that exit strategy in order to sell it to somebody who wants to carry that business on. So tremendous opportunity for a lot of people who want to get into owning a business, right? And so there's going to be a lot of opportunity for that, and having a relationship with somebody like yourself is going to be totally key.
I can go ahead, John.
Sorry, I mean, I agree. I mean, getting a head start we see it all the time as business lenders, right? Or financial lenders. We see all different types of industries across the board and have experiences with them. I, 23, actually now 24 years, right, in business and commercial banking. I've seen enough transactions. The funny thing is I was looking at a rough estimate the other day about, 23, 24 years now in banking. How many loans did I do? It calculated to close to about $450 million.
Jeez.
Oh, right on.
Yeah. So, I mean, averaging about 10 to anywhere between 10 to maybe at my peak 30 million a year. So within that, you come across all types of industries. So we are a great resource, right? I mean, for that.
Yeah. I think especially even if you're an owner who perhaps hasn't had the need, I can't think of why they wouldn't, but they exist. You just never know. Right? You never know what the next cycle can bring, and so having a great relationship there ongoing is just absolutely pivotal, I would imagine.
It's not what you know, it's who you know, right? I mean,
Totally.
You obviously have to be competent, thoroughly competent when you're professional, which, I highly regard John as a highly competent guy here. He talks over my head so much so that I just figure, hey, you know what? He's got to be, because he's always told me, you're not lendable. But
hey, I'll correct that though. I mean, oftentimes, and I think you want that good COI, right? That will tell you the good, bad, and ugly.
Right.
Yeah.
Oftentimes you might have some emerging bankers or a new wave or generation of bankers that I call them spaghetti strand deals. Hey, let's go through the rigmarole of give me your financials, let's apply, let's run credit, let's do all this, package it up, slap it on the wall, and see what sticks. That doesn't add value to anybody, right? And it personally wastes time.
Right.
You want a good lender that will say, look, let's take a look first, right? We're not going to submit anything. I'll give you, even though we are not underwriters to make decisions, right, on these loan requests, in 23, 24 years, I have a pretty good idea of what you can and cannot do. And every bank's going to be different, right? There's going to be nuances of what they can do or what their niche is. Um, I worked with another bank a few years back. All they did was gas stations. That portfolio might be kind of heavy hit after a while with all of the requirements of like lowering those gas stations in terms of operations, right? By a certain point in time. And maybe 2035 is it with electric vehicles?
Something like that.
But that said, I think you need a good banker or resource to tell you, hey, this is not going to be the case, or hey, you know what? It might not be yes for now, but here's a path, right? Get to this A, B, C, D, and then we can revisit and then get you there.
Yeah. It's just like when a home buyer comes up to a lender, the first time home buyers, they're like, well, I have crappy credit and I only have $5,000 in the bank. All right, let's create a plan to get you into a house in 5 years.
Yeah.
Right. That's how we do that. It's not like we slam people into the house. I'm not going to show a house to somebody unless they're completely approved. And we've gone through a process of understanding A to B to Z and how to get you into me handing the keys over to you so you have something that's sustainable. You're the same thing, right?
Right.
Exactly.
You're going to be there from the beginning all the way to the end. And there's always those fly-by-night guys that will take business from you. And I don't care about those people because I've been in the business for next month will be 20 years. And I have business coming to me, and I'm not bragging. I'm grateful because I work my ass off and I've created my business, and people come to me because I have those relationships. I'm always looking for new business, but I'm not going to put people into the wrong house. Right.
That's it right there. And it's just so invaluable to have a center of influence or somebody, like John or Vito, myself even, who's going to be honest about where you're at, so that you can get to where you want to go. Right. Just because it's no, it may not be that no may be just not right now. However, it takes some real feedback to be able to tell somebody where they're at so that they know what's the path to get to where they need to get to. And
Exactly.
it's critical just have people around you who will do that.
Yeah.
And the good, if I can add to that, is an experienced or seasoned banker, right, who has done a lot of transactions or seen quite a bit, should have alternative resources, right? And that's a commitment, right? I'll tell clients, like, again, it depends, right, what we're looking at that particular point in time. Policies change constantly based on what the market is, presenting us. So if we can make it happen in terms of a request for a client or a business owner, I might be able to find another option. Like we talked earlier, there are other options out there, right? Now it's a decision of how you want to go about it. Right? Do you want to give up a little bit of equity or control, or go hard money, pay more of a premium? Maybe there's what they call CDFI, like a certified or community development financial institutions that are out there, nonprofit, that can provide additional financing for you. So there's a lot out there. You just got to know where to look for it.
Or have somebody to help you walk through all that, right?
Exactly.
I was going to have two more questions for you, and I'll let you have you kind of started answering for me a little bit there. But I'll let you take either one of these two, because I don't want to go. Otherwise, we'll start talking for an hour. First one I was going to ask you, something we like to ask folks who come on is, what are questions you wish people would ask you, but they just never do, because they don't know the questions to ask half the time, right?
Yeah.
That or what's red flags somebody should look out for when they're interviewing or checking around for a good commercial lender, and because they've been in business for a while, they don't like the guy they got, they want to go somewhere else, or they're new and they just want to start going down the path. What maybe two or three red flags. So
yeah,
either question.
I'll hit both. I mean, the quick answer I wish they would ask me is like a good recipe for tiramisu or my beef stew. I'm ready to be a chef. They'll never know that. No, but really, I think if they could ask me a question and I would say, and they say, how can you help me grow my business, right? Or get me, and that's because I think the perception of a quote unquote banker is, all right, you can open up a checking account for me. Maybe you have a savings, you got some credit cards, and thank you. That's it. Oftentimes, maybe there's some lending, a line of credit, and that's it. We go beyond that, right? I mean, I really take time to interview my clients, get to know them, get to see not even just, hey, this is how you started the business and the now, but what are your plans 3, 5, 10 years? Because we've got to be locked step with you, right? I mean, I'm more of a proactive banker rather than reactive. Now I'm just taking orders, and now I'm a glorified customer service rep. You can get that anywhere you go, right? Banking's a commodity. A checking account's gonna be the same wherever you go. I wish business owners really took a lens of, okay, this guy's a real resource. How can you help me grow my business?
Wow, that's a great one.
But I think that boils down to what financial intelligence really is about, right? It's about us helping somebody, whether you're an individual, a family, or a business. We want to help create that team for you. And you might have a lawyer or a real estate guy or whatever, but we're here to help educate people on the many aspects of finance, right? It could be an evil thing, but there's so many people out there for the quick buck. You have to take the time to educate yourself, whether you're a business person or a family member, trying to figure out mortgages. It all encompasses the same stuff, and you have to take the time. We just interviewed a couple insurance people, right? Now we have a couple of guys that do trusts that we're going to be interviewing, and it's everything that it has to do with the almighty dollar. There's smart ways to do stuff, and there's quick ways to do stuff. Well, and that's why I brought you on board.
Now, to your point, that kind of spills into what Patrick said is the red flags, right? Oftentimes the whole, I like to underpromise and overdeliver. And if you have, by nature, bankers should be conservative, so if you have an air of, hey, let's take our time, let's understand this, and let's not jump the gun, or I think more seasoned lenders or bankers will take that approach and kind of be more of an advisory role, whereas maybe you could see, again, as a red flag, junior bankers are less seasoned, kind of say, hey, let's take that. Oh yeah, we could do it, and you're setting the wrong expectations.
Right.
I mean, I think, what I foresee, even though I don't have the crystal ball, things are going to get tight in the credit world, right, in banking, leading up into 2024. I'm already starting to see that. So I think you have these bankers like, I want to know, oh yeah, we could do it, no worries. That's off the bat, that's a red flag,
Yeah. Yeah, it makes sense.
I see it. I'm working a deal right now, and I'm talking to a lot of lenders. I have like 11 offers on this one house. It's completely original. It's, in not the greatest shape. And I talk to all the lenders, and they're like, yeah, we can do it. And I asked them the questions, and a lot of them kind of tripped up on themselves because they didn't know how to answer the questions. I'm like, it's your job. You need to know your job. You need to know everything about your client. And I don't care about the agent. I don't really have relationships with agents. As a matter of fact, I always say that I hate agents. I don't. I just don't like negotiating with them because they're squirrely and they do. But when I talk to a lender, they just tend to have their walls down because they don't know that I'm vetting them, right? And very few lenders really are worth their salt or their weight in gold.
It's also good to know. I think you were saying you're alluding to certain agents that view they're very transactionary. Hey, let's get this thing booked, let's sell, and then move on to the next opportunity or deal. It's important to know, as we're talking about red flags when it comes to lenders, are we a portfolio lender, right? I mean, most, if not all, big banks, right, the top tier, the B of A's of the world, are portfolio lenders in the sense that we have a vested interest to making sure you do well and can service the loan, right? So we do a lot of vetting up front in underwriting, and as a banker should be able to ask you all these questions and have that real heart-to-heart conversation. And
Right.
usually, like I said, the good, bad, and ugly, because we want to make sure if we're extending credit,
Yeah.
we don't want to default, and that's another that hurts our balance sheet. So
Well,
yeah,
I mean, let's just say I was going to buy a business, right? I already threw you an idea for a business last week, and I don't know the first thing. I mean, I do know how to read a P&L. I know how to, but I don't know how to dig into it and ask the questions. I'm ignorant at that point, because buying a business, vetting a business is not my day-to-day job. I know how to look at a real estate contract. I know how to negotiate. I know how to market in real estate, not buy a business, right? And so what I plan on doing is presenting it first thing to Jon and say, is this a viable business? And if he's like, dude, I would totally stamp yes on this loan all day long, then I know it's a good deal. And then obviously I have to bring in a lawyer that understands the whole process too, because you can't just do it on your own. Next thing you know, you hawk your house and you're in $4 million worth of debt, and you don't know the first thing about it, and all of a sudden you're stuck. So having you as an advocate, almost like the devil's, what is it? The devil's in the details, or the little guy in the background. This isn't really a good deal, man. You should pass.
Yeah.
And that's a conversation that I think in my time in banking have been more comfortable with. Right? It's never a comfortable situation to. Look, personally, I don't want to squash on anyone's dreams. I mean, who want to have that conversation? Like, this guy coming to me is asking, like, hey, I want financing. I got these grand plans, business plan. I'm passionate about it and all this. And then I'm coming in saying, yeah, sorry, too bad, too sad. Nobody wants that. However, it's a conversation that must be had, right? And we, a banker worth their, worth their, what is it? Salt?
Salt, weight in gold.
Yeah, maybe. All these different phrases. Should be able to make that determination for you, right? Like, we're not here to try to fit a square peg in a round hole kind of situation. If we know we can't do it, then we should tell you off the bat and not waste your time. Here's a quick example. I had a client who, for the longest time, was looking for an expansion, looking at a 10,000 square foot facility. Maybe 4 years running, and finally calls me last week. Says, "Hey, I found a place. I want to go." I was like, "Great. We talked about what we'll need. Give me some updated, financials. Let's take a look." "Hey, how quickly can you close?" I was like, "Well, I don't know, maybe 60 days. I mean, we're spilling into the holidays, so we're going to drag a little bit further out." And I'm like, "Why?" He's like, "Oh, I went into escrow." I almost I rolled my eyes. What I would say is, don't do that if you're looking. As you know, wait till you have a firm idea what your purchasing power is. Otherwise, you run the risk, right, of losing that deposit. And it was a large sum.
Yeah, two things, right? That's why I don't take buyers out on and looking at houses until we know how much they can afford.
Exactly.
And then we go down, because of this business in my area, you have to bid over for the most part, right? And do you think millionaires, multi-millionaires, do you think Jeff Bezos goes out and says, "I'm going to go buy that ring right now. Here's a check"? No, he has this team of people scour through every aspect, every dotted I and every T and every dollar amount, and they look at it and they say yes or no. They have businesses have M&A departments. They're paid on performance, and if they buy something and it's a steaming pile of cesspool, they're gonna get fired, right? So why would somebody that want to buy a business or a building or whatever without having a team of professionals look at it? It's a business.
That's right.
Right.
Now, I feel like this was a great introduction to a world that probably a lot of people don't know a lot about unless you've had to deal with a commercial lender on a regular basis. And so I think one of the things you said earlier, I feel like we could just do a whole other subject on specifically was like, how a commercial lender or banker can help you grow your business. I think that'd be a great topic just to kind of peel back the layers just a little bit for next time. So let's make sure we do that at some point.
You can go on all day, right? I mean, we can talk about all kinds of stuff.
Yeah.
Yeah. So I mean, this is a great start, and we're at 45 minutes right now, so we should knock it off. But, dude, I know we've been threatening to do this for a long time. I'm glad we finally did it. There's so much for me to learn, and I appreciate you spending the time to walk us down this path. Maybe next time you can bring up an application or a client example so we can go through the process. Obviously blank out the name and business number and all that, but
I like my job.
I mean, right. We don't want to know that. We want to know what you're looking at, the little fine
I'm happy
details.
to go through that. I mean, I just helped out a client right now in Florida. Again, at the end of the day, we're trying to help make lives better financially, get those dreams into reality. He was a veteran, great guy, great character, and wanted to replace rent expense for equity. And we were able to do it, right? Got a commercial condo, growing business, and, got it done. So, yeah, happy to provide some examples of, what we look at. And again, the tide changes all the time, right? Especially in a lot of uncertainties going on right now in the market leading into 2024.
Yeah, it's going to be good to.
This is what we're looking at.
It's going to be good to check in with you next year as things shift and change or whatnot. Jon, what's the best way to get a hold of you?
I will post it up, or maybe you can post it up later. But you can always reach me.
I have your information.
Old school phone at 650-484-5074. I would give my email address, but with that last name.
Yeah, we'll make sure we'll include it somewhere for you.
It's a little more difficult than Scarnecchia to spell, I'll tell you that right now.
Got an S in there somewhere.
Well, gentlemen, thank you again. Jon, I think we should talk to you next week. Thank you again for spending the time with us. I know this is just a start because there's so much more to learn about business banking. I have so many questions, and there's just not enough time in the day to wring somebody's ears. So
I'm here. We can talk people's ears off. Don't threaten me with a good time, man.
As long as you're buying, let's use your expense account.
Okay. Thanks, Jon. You're breaking up again.
Thanks a lot.
Hey, happy Thanksgiving to you and the family. Bye, guys.
See you.
You know.